Assalamu alaikum and salam sejahtera. Welcome back. In this lesson, we will uncover Chapter 5, Insurance Planning. Insurance can feel like a maze, but it's really about one simple protecting your future. So for the next few minutes, we're going to break it all down and give you a clear, actionable guide to get it done. Okay, let's just dive right in this question up here. It's not just some hypothetical, it's real. It's about the risks we all face. Life is always going to be unpredictable, but your financial game plan doesn't have to be. So let's talk about how you can build that safety net. We all face potential risks in life, right? Accidents, illnesses. The real issue we need to plan for isn't just the event itself. It's the financial shockwave, the ripple effect it sends through our lives and the lives of the people who count on us. Just take a look at this. You can see exactly how a personal crisis can turn into a financial one, and fast. That can mean your income just stops. A serious illness can bring on hospital bills that are absolutely catastrophic. And a death, well, it leaves behind not just grief, but also final expenses and a massive hole where an income used to be. These aren't just personal storms, they're financial ones. Here's the good news. While we can't stop every storm from coming, we can absolutely build a powerful financial shield to protect ourselves. And this is where insurance comes into the picture. It's our number one tool for managing these huge financial risks. So what is insurance really? At its heart, it's a pretty brilliant idea. Pay a small manageable fee. That's your premium to an insurance company. In exchange, they agree to take on the massive financial risk of something bad happening. It's all about sharing that risk. And what you get in return is maybe the most valuable thing of all. Peace of mind. So when it comes to risk, you've basically got 4 ways you can handle it. You can try to avoid it. Maybe don't take up professional rattlesnake juggling. You can reduce it like buckling your seatbelt. Simple. You can assume it, which just means you'll pay for small losses yourself. For those huge life-altering risks, the most powerful move is number 4, risk shifting. You hand that giant financial weight over to an insurer. Of course, for this whole system to work, it has to be built on a few core principles. These are the rules of the game that keep everything fair. Insurable interest, that just means you have to have a financial stake in whatever you're insuring. Utmost good faith. Everybody's got to be honest. No secrets. Indemnity is a big one. It means you're made whole again, not made richer. And things like contribution and subrogation, those are basically behind the scenes rules for how insurers work things out. It all comes together to make the system run smoothly for everyone. All right, let's get into the first big tool in your kit, life insurance. And here's the key thing to understand, the thing that makes it all. Life insurance isn't really for you. It's a promise you make to protect the financial future of the people you leave behind. The deal is pretty straightforward. You make your premium payments, and in return, the insurer promises to pay a lump sum of cash, the death benefit to your family when you're gone. This money gives your loved ones critical breathing room so they can grieve without the immediate stress of a financial collapse. Now, with life insurance, there's a really important choice to make. On one side, you've got term life. Think of it as pure, affordable protection for a specific period, say 20 or 30 years. It's perfect for when your kids are young or you have a big mortgage. On the other side, there's whole life. It's permanent. It covers you for your entire life, and it even builds up cash value, but the premiums are higher. So the million-dollar question, how much coverage do you actually need? Well, instead of just guessing, financial pros use something called a needs approach. Basically, you do the math. You add up all the financial responsibilities your family would have, the mortgage, any other debts, college funds, and crucially, the income that needs to be replaced. This gives you a clear, data-driven target for how big your death benefit should be. Okay, so we've talked about protecting your family from the loss of your income, but what about protecting your stuff, your assets, the things you own? That's where general insurance comes into play. Think of this as the insurance for your day-to-day life. In Malaysia, motor insurance is mandatory. You have to have it. Homeowners insurance protects your biggest asset, your home. Personal accident insurance covers you if you get hurt. And maybe one of the most important ones, medical and health insurance, what a lot of us just call a medical card, covers those huge treatment costs, making sure a health crisis doesn't become a financial one. Now, here's a really interesting aspect of the financial world. In Malaysia, you actually have 2 distinct systems you can use to build your financial shield. You've got conventional insurance, and you've got an alternative model known as takaful. So what's takaful? Well, it operates on a foundation of mutual cooperation and assistance. Participants all contribute to a shared fund called Tabaru with the clear intention of helping each other out. So it's not just a commercial transaction. It's a community-based system built on solidarity and shared responsibility, all designed to follow Islamic principles. And this table really lays out the fundamental difference perfectly. With conventional insurance, you transfer your risk to a company. With Takaful, you share the risk with a community of fellow participants. The payout doesn't come from the company. It comes from that shared pool you all contributed to. Takaful is also structured to be completely free of things like excessive uncertainty or garage and interest, known as riba. Okay, so we've covered life general, conventional, and takaful. That's a lot of tools and concepts. So how do you actually start putting it all together to forge your own personalized financial shield? Well, it really comes down to a clear 4-step process. First, you set your goals, get specific about what you need to cover. Second, you develop a plan by researching all your options. Step 3 is the most important one. You have to put your plan into action, choose your policies, and make them a priority in your budget. And finally, and this is key, this isn't a set it and forget it deal. You have to check in every few years because as your life changes, your shield needs to change with it. So at the end of the day, the crucial point is this kind of planning isn't about dwelling on what could go wrong. It's about taking control so you can live your life with less worry. It's about achieving that security that lets you focus on building the life you really want for yourself and for your family. And that's our explainer for today. We hope this has demystified the world of insurance and made you feel empowered to take that next step. Because building your financial shield is truly one of the best things you can do for your future self. Assalamualaikum and salam sejahtera. Welcome back. In this lesson, we will uncover Chapter 5, Insurance Planning.